Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again. It's a gold market. So in the last week, as you can see, gold totally has completed the scenario that we have discussed. So we really have paid special meaning to this event that has happened because it has really far-going consequences for the gold market. So recall what we said, that if market indeed has the bullish sentiment, that should, after the breakout, it could retest the broken pennant pattern, but it should not return right back down. And in this case, it will keep the bullish sentiment that now exists on the market, because you can see in the last period since the beginning of the year, market is forming high bottoms and high tops. That creates the bullish tendency. Although retracement stands rather deep, but in general, overall tendency is bullish. And we said that if market will not be able to hold above the broken bullish pattern, it will lead to really serious consequences. This could bring here the hand shoulders pattern, and it could really trigger the deep retracement here. But this hasn't happened, and you can see that Friday poor non-farm payrolls release has supported the overall bullish sentiment on the market. Market indeed has retested this trend line and reestablished upward action. Actually, guys, right now we have some new inputs on the gold market that really brings very important details and brings some fascinating with the perspective of the gold market. So actually, with the closing of the May candle on the monthly chart here, we have bullish grabber, and this bullish grabber suggests taking out of this top. This in turn could lead market to next area. This next target actually in the gold market is not the 13 even area, but mostly 1330. Because actually here, guys, you can see market has no significant resistance. So already has broken major resistance areas, and here it has relatively free space. And on the daily chart, we talk mostly on the 13 even area because this will be, as you can see, monthly pivot resistance one and daily overbought. That's why on the common week mostly we'll talk on this area. But in reality, the next destination point stands at 1330. So this is the first issue. Second issue is that as market already has broken the pennant and has retested it, normal bullish behavior assumes that price should not return back down again, since all retracements already has been done here. Market right now stands in extension mode, and what really bullish market could show is some meaningful mild retracement inside of this small stressing swing, inside of the Friday swing. That's why if you're searching chance to go long, you should watch for retracements that stands on this small stressing action. Because retracement too deep and return back down again to the support line, this again will be the warning sign, and it will be some kind of breaking of the normal market mechanics. Right now, the normal behavior of the market doesn't suggest any deep retracements. Taking into consideration this stuff, we could take a look at the levels that we could watch for possible going long. So on the 4-hour time frame chart, there are two levels we have. First one is 1271, that's accompanied by the weekly pivot point, and second one 1266 confidence support, and it's accompanied with the weekly pivot support one. That two levels are acceptable, and market could reach them without breaking the overall bullish tendency. Crucial level will be next confidence around 1255, 1259. This is confidence support will be, and also coincide again with the same trend line of the pennant pattern. This will be crucial area. So if market suddenly will return back down and will break this area, this will tell us the same, that the bullish sentiment has been broken, the bullish scenario has been broken. So as market stands not at overbought, so no resistance stands above the market. Here, we should watch for either this level or that level for taking the long position. Besides, guys, I do not know really what will happen on the opening. So you probably heard something about the terrible events in London recently in the weekend. So it's probably could lead to the gap opening on the gold market as well, because this takes the sign of the tendency. So in the situation in Manchester could be treated some maybe as occasion for initially, but right now as we have the Manchester right now in London, is starting to take in the shape of the tendency. That is really very warning sign. That's why market could show a bit stronger reaction on that events compared to what will happen in Manchester. So that's why on the opening market could show the gap. As a result, all levels could move slightly higher. So, but this doesn't change the overall idea. So you should watch for two nearest fib levels. So this conference and this level, wherever they will be at the opening. So that's our current view on the gold market. So we still support our bullish view on the gold market. Market confirms this by the recent action. Retracements, if will happen any on next week, should be small, either to this level or that level. And next area, next destination point on the gold in the common week will be 13 even. That is suggested by the week monthly grabber that has been formed in May.